Hello, today is Monday, August 3rd, 2026. Here is your daily signal. According to Fortune, the latest Iran conflict has propelled Chevron to its largest quarterly profit ever, while Exxon's income also surged, both benefiting from constricted oil supplies and soaring prices. The backdrop is escalating tension between the U.S. and Iran, with military action ordered in July 2026 that disrupted global oil flows, especially around the vital Strait of Hormuz. As Fortune reports, Chevron's profit nearly quadrupled, and U.S. drivers are now paying over $4 a gallon, a burden felt globally. As Associated Press highlights, Brent crude has hovered above $100 per barrel for much of the spring. These extraordinary gains for oil majors come as Congress debates new windfall taxes, and with continuing supply shocks, consumers face both sustained gasoline hikes and higher costs on goods reliant on oil, threatening margin compression and potential layoffs, particularly if this volatility stretches further into the year. The situation remains fluid, with the prospect of further U.S.-Iran escalation introducing even more uncertainty across worldwide markets. Next, we shift to India, where inflationary pressure is building. As Bloomberg reports, major Indian companies are gearing up for new rounds of price hikes after consumer prices climbed above the Reserve Bank of India's 4% target for the first time in nearly a year and a half due to rising food and fuel costs. The RBI has long aimed to hold inflation near 4% with a broad tolerance band, but persistent input cost increases and recent rupee weakness are straining that mandate. In June 2026, consumer prices breached the target, testing household finances and industrial margins alike, while the RBI was compelled to sell around $7 billion in foreign reserves on July 30 to defend the rupee, which is trading close to its record low amid higher crude prices. As Indian companies push through fresh price hikes, inflation could remain stubbornly elevated in the near term, forcing the central bank to consider further policy tightening. Households are already experiencing eroding purchasing power, and should these trends persist, medium-term risks loom for GDP growth and investor sentiment. Turning to technology, open source AI is reshaping the economics of artificial intelligence tools in ways that could be as disruptive as the Internet itself. As Next Big Future details, leading open-source AI models like those from DeepSeek are now practically indistinguishable from top proprietary systems for 95% of user queries, erasing the technological gulf that once justified premium prices. Open-source AI, defined by models freely released by groups such as Meta and Stability AI, is appending a market previously dominated by expensive, closed platforms. This democratization means what was once scarce and valuable is becoming abundant, with intense competition squeezing former industry heavyweights. In the short run, companies and end users are far less likely to pay for proprietary solutions. Instead, the real value is shifting to those able to offer customization, integration, or unique data capabilities on top of these open platforms. Medium term, this commoditization accelerates innovation and access, especially for smaller firms and developers, while challenging incumbents to reinvent their business models, as anyone can now tap into advanced AI for free. Now, onto the markets. S&P 500 advanced with a day-over-day gain of 0.72%, led by Microsoft, which surged as much as 7% over the month. Healthcare slipped 0.59% on the day, with modest sector rotation offsetting gains from other components. Finance edged down slightly, but improved nearly 4% month-over-month, with steady movement across major banks. Real estate declined 0.51%, yet posted a 2% monthly rise as rate remained resilient. Semiconductors held flat, experiencing sharp negative momentum over the past month and little immediate change today. Germany's international sector showed a slight dip, while France inched upward at 0.17% day-over-day. UK and Italy saw small declines, but Spain ticked higher with monthly outperformance. Australia and Belgium finished marginally lower, though India stood out with the strongest daily and monthly gains among the Asia-Pacific countries. U.S. oil climbed 1.33% today and delivered an exceptional 25% monthly performance. Gold decreased 1.49% on the day, while platinum recouped a 4.68% monthly advance despite minor daily losses. Agriculture commodities, including corn and wheat, diverged as corn rose over the month and wheat fell 3% on the session. That's it for today. You can find more news and details on our website. Goodbye.